Yesterday, I got in the Telegram public group that we have with over 56,000 members, and then I sent out some of the pip value calculations that I had in mind. At that time, I was just thinking of this is the information that I can share with my fellow members just so they're able to get that knowledge, the right information to execute the right trades. But I noticed that some of them were still confused. Then I decided to have this video whereby you are going to be seen today on how you can make $100 a day from just trading indices. What I'll be doing is that I'll be showing you guys the exact same steps of the amount of pips or points you need to catch in the markets in order to be able to reach these numbers. And if you can surely secure such opportunities or such trade setups in the markets, then there's a high chance of you achieving these numbers. So that's what we're going to be doing. At the same time, make sure that you comment, tell me what it is that you are feeling about this as soon as you're done watching it. And on top of that, just make sure that you like, subscribe, and as well, just turn on the notification bell so whenever I upload, you'll be the first to get updated. So I started with $100 a day. So in a trading month, basically we have 20 days because we only trade Monday up until Friday, which is 5 days a week. And looking at it, it means that 5 days a week you'll be making at least around $500 a week. $500 a week. Obviously, when you multiply this by a minimum of at least somewhere around 4 weeks, then you are now getting at least $2,000. You are now on $2,000 a month. So now someone out there would be like, but people out there making a lot of money. I don't want to be making $2,000 a month. I think right now we should be focusing on you being able to have that income that you can rely off of. So $2,000 a month, guys, to be honest, when you're looking at this from maybe dollars perspective, can be a bit small, but when you multiply it over into rands, bringing that account over into rands, then you're looking at least 30,000 rands, 30,000 rands a month. And this 30K is made by you not having to leave the house, not having to have multiple expenses, not having to literally spend a lot of time in the markets, but you being able to craft or improve your skill, you'd be able to achieve these numbers. So now if you have or are already making these numbers, because I know a lot of people, just like today, we executed this amazing trade in the signals group that gave us literally over 100 points, literally in just a few minutes, a few seconds, to be honest. And if you are, let's say, a person that's making generating money, making over this much, then it's okay. Just watching this video, maybe you can be able to tweak it, because this video will apply if you are looking to make $1,000 a day, $10,000 a day, but it all matters on your account balance. So I noticed that most people would be able to achieve the $100 a day mark, which is why I started with this, but I'll be moving as we are speaking, moving forward. So now, let us get on to this topic, how you can make $100 a day. I want you to understand one thing about the markets. So especially the index market, obviously you do know about the forex, the currency market, whereby we've got pips being the smallest value of that specific currency exchange. So now when it comes to indices, we've got what we call points. So instead 100 points will be equals 1,000 pips. 1,000 pips. So in the markets, if let's say it happens that the markets moves 100 points in that specific direction, we're now looking at least 1,000 pips on just that move. And trading indices, catching 100 pips or 100 points shouldn't be difficult. Literally on the 15-minute time frame, you can be able to capture or capitalize on it. So you'd be able to make at least 100 points. So now looking at it, I just took one of brokers that I actually trade with, and I'm looking at the spread here that they have, and the spread is actually mentioned in terms of pips, not points. So in terms of pips, and I'm looking at US 100 spread currently being at 190 pips, 190 pips. So obviously when you are bringing it down, it means that it's somewhere around 19. It's somewhere around 19, because if you take a 0, 0, 10, so it's somewhere around 19 pips, 19 points. It's somewhere around 19 points. The market has to move 19 points in your direction in order of you to make a profit. So let's say now you see in this is your setup, this is a resistance, and now you want to buy. So you buy here, the market has to move 19 points, or let me say 190 pips in your direction in order of you to start making a profit. So let's say now when you execute a trade, normally you'd see, especially when you use, let's say, one lot sizes, you'd see automatically when you execute a trade, obviously it will start off with a negative. That trade will start off with a negative, not only on one lot size, on all lot sizes, 0.01, 0.20, whatever lot size you're using. But on one lot size, let's say you are seeing a negative. And when you're seeing a negative like this, what it means is that it's not because you are in the negative. No, it only means that that buying and selling price, there's a difference to it. So for you to be in profit, it has to cover that amount. Price has to move 19 points in your direction in order for you to now be at break even and not be in negatives, but now be at least at zero. So now you're at zero. But the more it moves in your direction, the more you're going to be making. So now I want to show you guys on how you can literally be able to at least make $100 a day when you're trading indices using this exact same method. And using this because I see a lot of people thinking that maybe the strategy is what needs to be done, or maybe the risk to reward is what needs to be done. And I won't lie, that is true. You obviously need a winning strategy. You can't be trading without a winning strategy. And you obviously need a good risk to reward. So whatever that you're risking, you're able to make a bit more than that amount that you're risking. I remember even on my previous video, I mentioned something like 25, even with a risk reward of 25, with a risk reward of, let's say, 1:3, even if I win 100, even if I win 25 trades and I lose 75 trades, I'll still be in, at least at break even. And people were like, how is that possible? Just to show you guys that real quick, obviously 75 multiplied by 1%, because when you're risking how much? You're risking 1%. So obviously, how much does it bring? It brings you 75%. And now 25, these are trades, 75 trades, you lost them, you're only losing 1%. But you took 100 trades. In total, this is 100 trades. In total, it's 100 trades. You only took 25 trades, but now your reward is always 3 times more than whatever that you are losing. So looking at it, when you multiply 25, how much is it? It's 75%. So you can see that you are now at break even. So even if you have 25 winning trades at a 3% win rate, and you only have 75 losses at a 1% win, 1%, what happens is that you'll be able to see that in 100 trades, you lost many trades, but you're still now at break even. You're still now at zero. You didn't lose any amount in your capital. I mean that if you started with only $100, you still have that $100 as we speaking, even though you lost 75 trades. Isn't that awesome? But what strategy wins 25%? I don't know. I don't know. If you're trading with a strategy that gives you 25%, then you are, I don't know. It sucks. So what you should be focusing more on is, even if you have a 50% win rate, even if you have a 50%, you're so much ahead. It's way too much. Because with the 50% losses would be 50%, but 50% multiplied by that 3, how much does it give? It gives you 150. So 150 minus 50, you're already up by 100% of your account. Meaning that if you started your account with $100, now your profits are how much? Your profits are now $100. So you have $200 now in your account just by winning 50% of the trades that you take. But it's okay. I just wanted to clear that out so most of you guys do not get confused when I do speak about these. Also, I noticed that most of you guys that would be watching my videos will be beginners. So sometimes, it's very wise of you to go to my previous videos where I explain a lot in details about these specific things. So for now, we are speaking about how you can be making $100 a day while you are trading indices. So now, looking at it, I want to keep it as simple as possible. I think the reason being is because I do not want to be confusing a lot of you guys. And I want you guys to be doing this on your own in terms of looking at how I came up with these numbers and how you can tweak them in order to be able to just play around and come up with something that's better for you. Because let's say, for instance, I can say you must catch 10 pips a day using a bigger lot size. But maybe you want to catch 100 pips a day using a smaller lot size. So it all depends on what you're comfortable with. But it's very important of you to be able to follow through with this. Let's say now, for instance, looking at it, on US 100, the minimum pip value would be somewhere around $0.10 per pip, So meaning that every pip that's being moved, this is the minimum pip value that you'd be getting. Every 1 pip that's being moved, you'd be getting at least 0.10 pips. So obviously now you need to do what? Let's say with your spread difference being at least somewhere around, like I did say, looking at the calculator here, I think I mentioned it being at 190 points. Yes, 190 pips, this being our spread. So what you need to do is that you need to be able to look for a move that's going to be able to allow you to generate that $100. So how do you come up with that? So obviously with this, I need to see, at first, I need to look at a move that's going to be able to give me at least 100 points, which is 1,000 pips. So I'll be looking for at least 1,000 pips in the markets, ne? 1,000 pips. It's not too much to catch. It's only 100 points, and 100 points on US 100. You guys do know how it moves. I'm not talking about micro accounts. I'm talking about, you know, standard CFD accounts. So 100 pips. But now you also need to add the spread difference. Remember, you need to cover what you'll be owing the broker. So you also need an additional 190 pips, ne? You also need an additional 190 pips. So looking at it, it results to what? 119 points. 119 points. 119 points. At this time, guys, you are using the most minimum lot sizes. I'm not saying you're going to be using big lot. No, you're going to be using the minimum lot size that you can utilize. So what happens is that once you catch this move, once you catch this many points, using this, obviously it will result to every one pip that's being moved, you're getting how much? You're getting at least somewhere around $0.10. Remember, when you are playing around or when you are coming up with calculations, what you can do is that you can now start looking at the lot size that you are comfortable using. Maybe you are comfortable with using a lot size that's going to be giving you 0.50 every pip. You understand? So it all depends on the lot size that you are more comfortable with. So looking at this, obviously I understand from my side that each and every small pip using the minimum value would be equals to this. But I did say that you guys can play around with the points and play around with the numbers that you're comfortable with. When you're done using this first example, we're going to be moving over to the second example to show you guys how you can play around with them. But it's okay. For now, I can see a lot of calculations going down. You don't have to confuse yourself like that. Just keep the most important or important parts. Instead of you trying to understand how the numbers here happened, just know that this is like, you know, the exact same truth. You don't have to do or come up with the formulas yourself. But yeah, so using this, obviously I'm looking at 0.10 and me catching 119 points, 119 points, which is 1,190 pips. That means that I'm now up, my account is now up by $100. So even if you just say 0.10 multiplied by 1190, let me just take a look at that real quick here using my phone calculator, just simple maths, not to confuse myself as well. Just to make sure that I'm also on the right track, 0.10 multiplied by 1190 pips. Yes, it means that yes, I'm up by $119. I'm up by $119, $119. But remember, this $19, the reason we took it out is because of the fact that spread, we need to also cover up that spread difference. So now this is one of the most simplest way you can get to your first $100 trade, meaning that if you can only look for 119 points in the markets, at times, you know, obviously the spread is different. Spreads would be low, spreads would be high. Let's say, for instance, now at this time when I saw it, spread was 190. But find out that maybe it's 140 in the evening or 150 in the evening, meaning that the numbers are now going to be different. You can now play around with it. Like, let's say now you can see that, okay, the spread, instead of me catching 119, maybe you'd be required to only catch 1,150 pips in order of you to be able to get to that $100 mark. So it's going to be different depending on, obviously, the broker that you're with, and also in terms of the spread. What is the spread at that current time? Because spread is different. When the market opens, when the market closes, it's not the same as how volatile the market would be in terms of the spread. And when the market is quiet, spread is always like different. It's never in a standing still position. At times it does happen to be, but normally it's not, unless you've got an account whereby it's a zero fixed spread, or it's like literally just a zero spread or a fixed spread account, meaning that the spreads never change. Then that's when spreads will always be like that. But that's just it. And I think on my next videos, if you guys want to be seeing me talk about some of the trading accounts, what are the advantages, disadvantages of them, like maybe a zero spread, raw fix, a raw spread, this and that. If you want all of that, I'll be able to make a video of it. So now let us take a look at, we've seen how we can make $100 a day. How we can is by at least capturing this many points every single day. If we're able to capture this many points every single day, you'd be able to get it. So even if it's on the 15-minute, 1 hour, I don't care what time frames you're using, I don't care what time you trade, but if you're able to catch 119 points in a single day using the minimum value, you'd be able to do it to capture or capitalize on $100. So let's say now you are like, you know what, me, I want to be using at least 0.50. I don't want to be using the minimum. I want to at least push it up to 0.50. Okay, no problem. So with this, what happens is that you now have to at least change the metrics of how many pips you can catch in order to be able to play around here on this mark. So let's say now you change something, you stop trading with the minimum values, and you start, let's say you push it up to each and every pip being at least worth 0.50 cents for you, going on the contract lot sizes that you'll be using. So 0.50 being a pip value of yours. So what you'll do is that if you happen to catch the exact same amount of pips, this is why you'd see a lot of people who can trade the exact same move, but you can make more money, I can make more money, or we are both not going to make the same amount of money because of the fact that we're using different types of values. So let's say now you are now on 0.50 and you catch the exact same amount of points, which is 1,190 pips. Now you'd be looking at least, let's say 1,000 pips, 100 points. Let's not speak about spread, because spread now, I believe it changes. So it's not a standing still number. I just give you guys this so you're able to see that you need to cover up spread first before you can now get into it. Because at the end, even with 0.50, the spread is still going to be, it doesn't change when you use a bigger amount. It's still going to be the same amount. So I think for now, let me just put the spread aside. You guys saw how we apply spread. But let's say you catch 1,000 pips, which is 100 points. With this move that has happened here, what you can automatically see is that instead of you making $100 a day, you can still be capturing the same amount of pips every single day and scale your account up to $500 a day by doing what? By just adding more positions into or going, let's say you, instead of just using one of the minimum, you add 5 more, That only depends on your account, if your account would be able to hold. Because if you just multiply by 5, that means that on a 500, you'll be making $500 with the exact same move. This is the exact same move, 1,000 pips. And let's say now you want to stick to 100 pips without going this, using so many pips. So what can happen is that 0.50, whereby you are looking to target and make at least $100 a day. So what you're going to be needing now is 200 of the pips that you'd be trading in order of you to get to $100. Because why? Because looking at it, obviously now you're trading a bigger lot, so you can also as well just reduce on the amounts of points or pips that you are looking to catch in the markets. And when you do happen to catch them, then it means that now you don't need to be catching 1,000 pips in order of you to make $100, just like this one here. What you can do is that you can only catch 200 pips using this lot size, and now you'd be able to make $100. So obviously these numbers play around, or these numbers actually do happen to change as you choose to change when using that pip value, because looking at it, the pip values will not be the same in terms of the amount of money that you enter with, but at the end you can be able to make it $100 a day. How? By you being able to spot out those beautiful entries and you being able to capture. So how you can go about it is you can say that you are looking for upward, downward, downward. This is the break, retest, and you're going up. You buy here, you take profit here. This is your normal typical strategy that everyone should know when you're trading. And your stop loss right here, take profit here, risk reward maybe is 1:3. That's 3:1. Let me just put it this way. That's your risk compared to reward. You are losing 1 in order to gain 3. So for this, when it does happen to, you look at as well some of the pip values that you'll be looking. So when you're looking at the pip values, in order for you to be able to at least make $100, that means that you need to risk at least 3:1. So that'll be 3 times 1 trade hitting 3. It'll be like it divided by 3. Let me just do this. $100 divided by 3, 33.3. Yes, your stop loss would be 33.3. So this is how much you'd be losing. This is how much you'd be risking in order of you to get to that $100 mark. So if you've got an account maybe of $33 or above, you can make $100. But that means that if you've got a $33 account, you can get to $100 a day mark. But it'll mean that you can blow your whole account, because that's how much you'd be risking. But if you've got, let's say, $1,000 account, or you've got maybe, let's say for instance, a $200 account. Let's not go too far. You've got a $200 account. How many losses do you have to take in order to get to that $100? That's 33. I think you have to take more than at least 7 to 8. You need to take 7 to 8 losses in order of you to blow your whole account. If you know that your win rate is higher and you can't be taking 7 to 8 losses, that means that there's a higher chance of you capturing that 3% on one single trade, which can easily be that easy $100. So these are one of the methods that, like, I remember a few years ago when I looked at it, when I started putting this into action, I saw it this way. Things changed for me because I started catching more pips and points in the markets. And one of the reasons that helped me dive or get into indices a bit more quicker was the fact that instead of me looking for 1,000 pips on GBP, JPY, or a lot of pips on a specific pair or something, what I done is that I just knew that on Nasdaq or US30 I'd be able to capture small amounts of pips. Let's say for instance, also I noticed that when I use one lot size, one lot on GBP, JPY, it'll be worth at least somewhere around like $12 for every one lot. So I know for sure that if I need to get to $100, I need to catch at least somewhere around 9 pips. Because if I catch 9 pips, 9 to 8 pips, if I catch 9 pips, how much is it? 12 times 9. I think we're looking at 100 and something minimum. 12 times 9, 108 years. That means that with just me catching 9 pips only, imagine 9 pips, I'll be able to at least make 108. But now what it does is that I'm using one lots. Some of you guys' accounts, maybe it can allow you to execute a trade using one lots. And maybe some of you guys, you can do that. And now you can also capture like 9 pips and still be able to get to that $100 account. I think the most important thing that I'm trying to say here is that when trading, don't just look at the stop loss, don't just look at the take profit, don't just look at the risk reward, don't just look at the strategy, but you need to also look at the pip value, how much is worth a point of that specific currency or index that you're trading. And on top of that, you also need to dive a bit more deeper and look at each and every point that the market is going to be moving in your direction. How much are you going to be making, and how much is it going to cost you to cover the cost of making business with the broker, which is the spread. Hope you guys enjoyed this video. I hope this actually helped you into coming up with a practical way of getting to that first $100 a day. Let me guys comment below. Let me know if you guys want to see how we can scale our accounts up to at least $300, $500 a day, and maybe $1,000 a day. And one thing that I would like to do is that on one of these days, what I can do is I can take my account maybe, and then I can put down execute some trades that I'll be showing you guys, maybe GP, one lot. While I'm explaining to you, I'll be executing a trade, and then I'll show you each and every point that's being moved. But for now, test it, play around it, so when I do happen to come, you also are coming with some knowledge, and you also know what's actually going on, unlike not knowing what's going on at all. But it's about Mothupi. I hope you guys did enjoy this video. Make sure that you do comment below with what it is that you are understanding, what you're not understanding. And on top of that, like this video if you did happen to find value. As well, subscribe and turn on the notification bell, and I'll see you guys on the next YouTube video.